What's up, everyone? Is insider trading real? Are we able to see when institutions are involved in the market? And how can we see this? In regards to insider trading, I believe there may be some truth to that. And I'll show you what I've seen in my learning and what I've seen in this last CPI print that has me more convinced. First of all, think about it. CPI, like other high impact news events, is a much anticipated event, right? Especially with the question of the Fed rate cuts and their plan to cut 3 times this year, right? There's usually a lot of volume and price moves a lot during high impact news events just like this. Not always, but just back test it. So just ask yourself this: why wouldn't big players, institutions, be involved on a day like this? Once a month, right? This is one of those days. Markets have the potential to be cooking up something, on days like this. Sharks are lurking in the water, orders are being filled, and if you can identify where the markets and sharks are headed, you could eat with them. Tag along on some great positions. The market's setting up for its move hours before the move actually happens, hours before the news event is actually released. So today I'm going to show you how these players in a way knew or anticipated a hot reading of CPI and how we could have positioned ourselves to eat with them. So we'll be going over our Euro USD setup, and then I kind of want to just go into the mindset of like, hey, things were cooking beforehand. And if you read in the news, seeing Forex Factory with expectations, usually I don't really care about expectations, but it's good to know what other people are anticipating. So let's just take a look at Forex Factory real quick for CPI. Previous report in March was a reading of 3.2. The forecast of a higher CPI reading, 3.4, ended up being 3.5 this time, right? So higher than expected, hotter than expected. So, this data is public to us as well. So we could see that readings are hotter than expected. Why is the case, right? But that's not always the case. It could have easily been lower and then the market turns the other way, right? But it wasn't. So let's see how these institutions were positioning themselves, filling orders hours before the news was actually released, to stop out all these retail traders and benefit the most, as much as they could beforehand. If we're just basing on this time frame, we see the market right here in April, I believe, right there, kind of bottom out to come up to some more premium supply. And at this point, there's this huge buy to sell and prices come into some premium levels. So I'm not looking to buy here, just kind of watching what price is doing. And with these anticipated news events, just kind of seeing where the market's shifting towards, if it's going to be shifting that way. Price comes up higher to come back lower. From an institution, remember, I'm trying to sell high, buy low, right? So what do we see here? Price, sweeps some orders over here, comes back into some further imbalance as well, right? Next to this equilibrium, 50% of the cause of this huge buy to sell, right? Cool, noted. And then what do we see when we step down on time frame? We see price breaking order flow. This is kind of interesting. Okay, cool. No bias confirmed yet. We just see price has broken order flow to the downside, right? There's orders being eaten up here, and then boom. Market structure shift, if you want to call it that. What do we see here further? A lot of imbalance coming out of this, right? A lot of imbalance. So price tickles the 50% of the equilibrium and then comes back down. Why is there a bearish order flow sentiment right now? News hasn't even been released, but the market is trending bearish. It's finding more reasons to stop traders out, right? And then on the eve of CPI, this is Wednesday, April 10th, CPI releases 8:30 a.m. Eastern time, right? Things might be cooking up here. Now, I've been studying Wyckoff for over a year now and training my eye. And, what's happening over here might be confusing to some of you. But what I see is a clear distribution of orders. Sellers in play right now. And I'll take you through it. Just take a look at this Wyckoff schematic. This is a distribution schematic. When you see this, there's a high probability that the market is going to sell off. Okay, so we see, confusing. You don't need to worry about any of these labels, but just want to point out two things here. Market grabs liquidity over here, comes back down, grabs liquidity again, and then two finally shows that sign of weakness. Okay, cool. What do we see here? Market grabs liquidity here, comes back down, grabs liquidity again, and then finally shows that sign of weakness. Tell me this is not the same thing. Liquidity grab, boom. That second one is very key, because look what happens. Look how suspicious this candle is. This wick. Just taking that into consideration. Just put your thinking cap on. If you're thinking about the sharks swimming here, where are they swimming? Where are the orders being filled? Taking into account they're anticipating a hotter than expected reading. Remember, if it's a hotter than expected reading for this pair, that means price will go down, because it's the inverse of the dollar. Euro USD is the inverse of the dollar. Yeah. So, okay, cool. Let's take a look at volume, see where people are. Okay, we see this spike right here. Why is the volume dying down if the market's going up? That's not a breaker structure. That's a trap. Right? Okay, cool. Shows volume, increasing on the way down. Okay. Institutions have high volume. Okay, let's take a look at the RSI. We're seeing price diverge. We're seeing higher highs on price, but we're seeing lower highs in the RSI. Interesting. What I'm seeing here is institutions at play and them filling some sell orders in anticipation, loading up for a bearish Euro USD. There's this last buy to sell that has been unmitigated. Price needs to come back, mitigate those orders, because this is the last buy until they sold. So they still, institutions still have some open buys left here that they need to mitigate out of, right? If you want to mark up some supply over here, Some supply over here, whatever it is. But let's just take a look. I have a certain criteria to place an order here, but that's not what we're really going over. But we're just seeing the intention of the seller here. Cool. What time is it? So we have about 30 more minutes until CPI is released. Okay, now let's play price and see what happens. So we're about 3 minutes left. Okay, cool. This is where it's popping. This is where they've laid their hand, but you know, you gotta be quick. So what do we see? It's 5:29 Pacific. News comes out in 1 minute. Crazy. So we see the sell-off. Like I said, you still have some buys left to mitigate out of. Price comes back in literally 30 seconds before news is dropped to mitigate out of supply. Okay, so there's some suspicious activity here, I'd say. This is a huge wick. Just like this. And price showing it's diverging, right? Let's see what happens. Boom. Was this a surprise? Was this a random move in the market? I don't think so. Look at that. Price goes 1 to 82. 61, a good 60. Was this move random? Or were the institutions just placing their orders, filling their orders this whole time? If you ask me, they were filling their orders hours before. Price had been distributing for almost 2 hours before. This requires a lot of money. All these movements require a lot of money, right? Why would institutions be just pouring in money if they don't know where the new CPI reading is going to be going? This is all not random. This is a consolidation. It's consolidating to trap traders, stop them out before sending it. This is just a slingshot waiting to be fired. And that's what happened. Last order was filled and the rest is history. I'm grateful to, see orders being placed like this. I'm grateful I can identify this type of institutional order flow. Cool. If you like this video, please like and subscribe if you want to keep up with this content. Catch you in the next one. Thanks.